welcome back to another episode of the Real Estate Reserve podcast, number one real estate investing podcast in the whole wide world. I'm Jason Balin from Hard Money Bankers. Sitting next to me in studio, Ian Horowitz. I'm just happy that we're back in studio because, listen, we've had some really good guests on, that can't make it to studio. But I like when we are kind of in person, like feel the love. Right?
Yeah,
we're
love,
all
energy.
close.
Yeah, man. Like there's definitely a different energy feel when you're in studio. And part of the problem is though some of our guests, they're all nationwide, and we'd love to have them fly in. But I guess, excuse me, that's the next iteration of our show. Once you get a private jet, then we can fly them in on your jet, Jason.
It's a me. We could do we. I mean,
I'm down with we. I'm down with we. I mean, it's just as long as you're picking up the fuel tab, I guess we can call it even. So
got it. All right. So today we got a great guest. We're going to introduce you to Amin here in a second. But we're going to talk about. Let's put it this way. It's a topic that might not be the sexiest topic, but we're going to make it a sexy topic, right?
Yeah.
So, Amin, why don't you just do a quick intro about who you are, what company you work for, and then we're going to make this entertaining for everybody.
No, we will. First of all, thanks for having me. Been waiting to get on this podcast. Short drive from you guys. I'm obviously in Ellicott City, and I didn't get my hugs when I came in, so I guess I'll give one before I leave. My name is Amin Khakpouri. I'm with Universal Title. Been with them since 2012. And we've been rocking and rolling, growing, and it's been a fun time. Title itself might not be the sexiest part of the real estate transaction, but I think we bring a lot of fun times, a lot of accuracy. But I always show up dressed to the 10 for your closing.
I originally had you pegged as a real estate agent, broker. Maybe a lender. I wasn't going title attorney, but I could see an attorney. You got to put on the suit every day.
That's right.
I whenever we go to conferences, I always laugh because you guys always walk around in the black suits and the white shirts, and I'm just like, yeah, nice uniform, guys. It's good to make fun of everyone. I mean, I don't wear anything but this. I know it's the first time you meet me, but this is it. This is you. I dressed up for you today. I just want to let you know.
I appreciate it. I appreciate it. So I got something special for you guys too. I got the Tabasco.
I love it.
I brought the fire for you guys.
All
the
right.
hot sauce.
So give us the backstory a little bit. So I'm assuming when you were 8 years old, 9 years old, and you wanted to figure out what you wanted to be when you grew up.
Yeah.
Like you weren't like, hey, I want to go to law school, become an attorney, and want to run a branch for Universal Title as a title attorney. Like, what's the backstory? Like, where did you go to school? Why did you want to become an attorney, and kind of what did you want to practice?
So my story is actually interesting. I'm originally from Iran, so I was born there. I moved to the States when I was 13 years old. So right when I was about to start high school. Now imagine coming in from a different country, not speaking in English, look and dress differently than everybody else.
Sure.
So it was a fun 6 month starting high school. But I actually always wanted to be a dentist. That was like my whole admiration. And then I went to college and I took biology and I was like, that's it. I am not going to be a dentist. I'm not going to be any sort of doctor. So I got into political science. And then after that, I graduated in 2008 and I'm like, I have a political science degree. The market's going down and I can't find a real job. So I'm going to go to law school and stretch this out for another 3 years. And when I did that, and I actually wanted to be a criminal defense attorney, I got out. And there was really no jobs that would be entertaining to me.
Sure.
So I'm like, and at the time, foreclosure was skyrocketed.
Oh, yeah.
It was like one of the main jobs available. So I took it, did it for 9 months, and could not hate it anymore. People would call in. It was really sad. And some people was like second or third home. It was like a beach house. But for the most part, it was like primary residence getting foreclosed on. It was just tough. And then Universal Title had an ad. I applied to it. It was the Baltimore office. And next thing you know.
Wait, and that was the first, like, you were an attorney, right?
Yeah.
At that point.
Yep.
But you didn't know anything about
not
title
title
insurance, contract law,
no,
any of that stuff at that point.
All I knew is that's the happy side of the real estate. That's the first part of it. People are happy. They're getting into the home and they're excited. It's like, that's the side I want to be versus this other, the back end part.
Yeah.
Yeah.
Yeah, no, I mean, dude, it's you got to do something that motivates you, right? Like we were just talking off air, is like we were talking about my brother was a prison guard. He had to go to prison every day, and then someone else was telling a story about our friend's a defense attorney. He has to go to jail every once in a while. Like, I mean, like you got to be in a place where you feel productive and you're happy in what you do. Otherwise, like, what's the point in doing it, right?
Yeah, I could tell you right away when I sat down for like interviews and just being around the title side, even just within a couple of months, I could just get the sense that like what you put into real estate, you can get out of it. You know, you can build more business, you can get new clients, you can open new offices, get into different territories, and all of that will be rewarding. And then you can also get real talent around you, like great team members. But that was like very evident. And I feel like in my last job, like I feel like I was just in a cubicle, just sitting around doing nothing.
Yeah. And also one of the beautiful things about being involved in real estate, but also probably what you see is because you're interacting with a lot of folks and a lot of clients, potentially a lot of high net worth people, and your sphere can just grow very, very quickly because you're involved in so many transactions, right? Like the average real estate investor, real estate developer, someone like that, they're particular, they're, not that they don't have big spheres or big influences, but like they're not doing a ton of transactions. You're doing hundreds of them yourself on a monthly basis, right? So that's potentially hundreds of new clients, hundreds of people to grow your sphere in. And, really the sky's the limit because you can, and that's kind of how I feel with lending. We're doing dozens of transactions every month, some old borrowers, some repeat, and some newer borrowers, but like I'm just meeting new people all the time. And typically the people you're dealing with are, successful people.
Yeah. I mean, we, like you said, we have politicians, athletes, financial advisors, like pick any kind of area of expertise. And we've had them either as a buyer or seller. So it's great. I mean, obviously we don't connect with them one-on-one that closely, but it certainly opens up a lot of doors and connections that we can have in the future if needed.
No doubt.
Yeah. And that's the great thing about real estate, honestly, because everybody's involved in this somehow, whether it's their own primary residence, investment, beach house, whatever it may be. Like somebody's going to go through that experience of purchase or selling real estate or refinancing.
Now, inside what you do you prefer? So you're what they call the title attorney, right? Like you have a closing agent, I presume.
I've been called worse, but yes, that's
my well, your real term is a title attorney.
Yes, I know.
From my side of things, I'm usually that goddamn asshole. He's trying to make me do X, Y, and Z. I don't need a survey. But you got a bunch of people in your office. Ultimately, in your hierarchy of title, because I don't think a lot of people understand, right? Like you got your closing agents, you got your processors, you got the people that are doing all the escrows, and then you got you.
Right.
You're really the point person, even though you might not be the forward facing person. You're the ultimate decision maker to say, yes, this title insurance is being issued. Yes, we're going to let this property close because the chain of title is correct. Like you're the point man.
Right. Yeah. I mean, in my office, for the most part, we're in a great jurisdiction. We're in Howard County. Obviously, for the most part, title is very smooth, clean. But yeah, when there's question whether it's something we can insure over, or if there's a tough decision to make or assessment of the risk, then most of the times I'm involved. That we have to get involved. Underwriters involved too. They have to know, what they're facing. But yeah, I mean, a lot of times on a daily basis, there's discretion, whether we're okay proceeding or whether this is too much risk. But yeah, I get involved in all that.
Let's actually walk through a transaction because I think a lot of folks don't know what it is. I'll give you an example. So we're doing a loan for somebody that has to close in like 2 days, and he's going back. And I was like, I'd recommend going to the title company that you purchased the property with because he wants to refinance out. And listen, we only got 2 days. And I'm like, I can do it on my end as the lender, but like you need to make sure the title company can do it because that's challenging. And depending on, you might do updated lien search and things like that, depending on what jurisdiction and county it's in. Like walk us through the process because a lot of people I think are like, yep, just give me insurance, give me title insurance. Let's close it. Let's call it a day. And like, it's a lot more challenging than that. So maybe walk through a transaction where, let's just say it's a real estate investor. They're buying a new property in Maryland. It doesn't really matter, any area. Like what happens behind the scenes?
So we get the copy of the contract first and foremost. We open a file for it. And the most important thing that we do at that point, we order a title search. That's a 60-year full chain. And even if it was a lot within that 60 years, we go all the way back to the lot. And then it comes back. That takes like 3 to 4 days to come back. And we review it for accuracy. Like we're looking to spot issues within the title chain. If everything's clean, no problem. We'll send out the title commitment, which is our promise to the lender and to the buyer that we can insure title, assuming all the conditions are met. Taxes are paid, water's paid. We get everything that we need on the curative side. And then once we release that to the lender and the client, then we work with the lender to finalize the numbers. We got to make sure the loan fees are on there, transfer and recordation fees, title fees. We sum all that up, put it on the settlement statement, disclose it to the client, tell them how much to bring to the table, get together and sign the paperwork. Summary of it.
So let's break some of that down, like the abstract. Like, where do you get the abstract from?
I was going to say, where does this chain of title magically come from, right?
Yeah. Like is this all digital, or you have to go down to courthouse?
No, it's all digital these days.
Good.
So what used to be is back in the day, you would send the request into the abstractor. They would go to the courthouse, they would pull everything up, and then they would put a package together and send it to you. Now, for the most part, they got through a certain date, so they already have that backlog, and they just add to it depending on where you're starting from.
So here in Maryland, if someone goes on, like, let's say you're working an off-market deal, and you're like, I want to make sure this story checks out, and you get on the land records site and you look it up, and you're like, I can see when this person sold it, this person sold it. Their story kind of checks out because I don't want to waste the time on a bad title deal. Is that similar place that you're getting similar information?
Yeah, it's the same exact place. So what we do is we run the Maryland land records. This is the third party that does this for us. It's really through our underwriter. So the underwriter has both a title search system and then a title insurance system. So they run the title search. It comes back with all the deeds on the property, comes back with any open mortgages on the property, any open judgments or liens on the property against either our seller or prior sellers. And then they do a quick review, and then they basically issue the commitment, which is really just a report that says these things have to be satisfied.
So if you're using like First American,
that's
First American's issuing that to you, or you're issuing that on behalf of First American?
We are issuing it on behalf of First American after we get it from First American.
Okay, so First American's doing kind of their legwork, and then you're providing that. Okay, and then
that's correct.
And then you put that all together.
Yes.
So why are like lien sheets in Baltimore City take a long time?
Hold on. Go on, I'm ready.
So I need to address the challenges. I mean, if you think of them just like you would think a business, I mean, we've all had challenges with personnel. They're just going through a challenge with personnel.
The city
is the lien desk department. And I feel for them. It's the city is, as you guys know, they have the most volume in transfers.
Oh yeah.
So obviously, more houses are listed, more houses are transferred. There's more quick claim deeds being done in the city. So the request for the lien sheets is more in the city than it is in any other jurisdiction.
So the lien sheet's different than the abstract.
Yes.
And you're that's not online. But that is online.
No, the lien sheet you got to request specifically.
Every county?
Not every county, but pretty much every surrounding county around us, except Anne Arundel County requires it. Baltimore City, Baltimore County, Howard, Hartford.
And then you go and you have to go down to the courthouse to get that?
No, it's from the finance department. So you pay the finance department their respective share of it. You do it prior to closing. You pay them, and then they send you the
lien sheet has, for those that don't know,
right.
We have a very diverse audience, is the lien sheet has open water bills, environmental citation, property registration issues, any fines, any outstanding bill, like especially let's just use Baltimore City because that's where we worked a lot. If they come and board up your house, they might assess a $1,500 charge for you to board this house up that you're buying. And I think when people wholesale or they're looking to work off market leads, it's hard sometimes because they have so many back taxes. And we're buying a 47-unit apartment building as we speak right now. It's been in receivership since 2018, and the water bill is $110,000. And the bank's like, now what? And like, well, it's your problem, not ours. You know? But that's why, again, this is why, because the city wants to get paid before this transacts, right?
Exactly right. So the city wants to get paid when you submit that deed for recording. The first place it goes to the finance office. It's literally in the same building where the lien desk is, and you got to pay everything on that lien sheet before you can go to the next stage, which is to the courthouse to finalize your recording. And if it's on that lien sheet, you better have a receipt for it, or you got to pay it out at the time of your recording. The issue with Baltimore City lien sheet versus everywhere else is what you mentioned. Baltimore City lien sheet has nuances in it where most other jurisdictions don't have it. Now, some of it is to the nature of the properties. You have sometimes boarded up houses. You have homes that are just should be demolished. Sometimes they have lead on the outside. Those are notices that you would get on that lien sheet that will come back to you. Whereas in Howard County, you're pretty much just looking for taxes, maybe homestead tax credit, and then water, stuff like that. All of which you can pull online.
Homeowners association liens, maybe.
Yeah, that comes back on the title search.
Okay, that's on the abstract.
Lien sheet you're thinking about on
so
the
what's the difference?
municipality.
Yeah, what's the difference between the two?
So title search is the land records. So we're pulling land records which respect to property's interest on the title, creditor, and any kind of HOA or encumbrances.
Okay.
Lien sheet is directly what the municipality is charging on a regular basis against the property and any citations or violations against the property from their perspective.
That's good.
So it's not a personal interest of anyone that's within title. It's just what they're assessing against the property.
Yeah, so if you're a property owner and you get that citation and you throw it out and say, screw the city, that thing's just accruing interest.
Yeah.
It is, you're getting your $25 trash fine turns into $5,000 real quick, and
That's
you can't
correct.
sell the property. Well,
That's
you
correct.
can sell the property. You're going to pay them.
You're going to pay it.
How well are a lot of these things negotiated? A few days in advance.
Not with the city.
No,
or it's challenging. Too.
Water is different. I mean,
Yeah.
water. There used to be a process. It was called an informal conference hearing. I think that's what he used to call it. That's when, like, you had that $110,000 water bill. You would have put a request in for a hearing. You would go in and submit why it shouldn't be $110,000.
Yeah.
I've seen one. We saw one $385,000. So it's different now. I mean, now it's a much longer process. And if you have a closing, you're probably getting extended, or it may just not even happen because of how long that process is. But the city, the other thing about the city is the violations you mentioned. Sometimes it's not just monetary, and that's, in fact, I think that's the question that's going to come up. If the lien sheets continue to be delayed, the question that's naturally going to be asked is, well, can you just escrow some money and then close the transaction and wait for the lien sheet to come? The idea being that, well, whatever it may be on the lien sheet, you can just put a monetary value on it, and then you can still finalize the closing. We don't do it. I don't do it. It's too risk on our part. One, city lien sheets, they're not always monetary. There's sometimes work that needs to be done. Sometimes it's an abatement that needs to be done. Like, for example, there's issue that you need to get a written permission for, or it's flat out missing a use and occupancy. I mean, that money is not going to solve that. Like, that's going to take someone's physical labor and stuff to do. So, yeah. And then two, we get stuck with the recording package. That's a problem for us because we're on the hook. Like, our job is not done until the deed's recorded. So if I close today, I don't get the lien sheet for another month. Those 30 days, that's gap coverage, meaning if somebody comes and puts a lien against that property,
that's real risk.
Yeah, that's negligence, and actually intentional because the underwriter won't cover it. So the title insurance agency is going to be on the hook for it. So that's a no-no.
The title. So
the title company.
The title company. Yeah.
Yeah. Let's talk about that of who's who. So, because you work for Universal Title.
Yes.
So is Universal, is the term title producer, title agency, title company, and then there's First American. Let's just say, I'm sure you probably write through other people besides First American.
Yep.
But like, I think that's where people get confused. Sometimes they don't realize that it's kind of two parties.
Right. It's two parties. Yeah. I mean, in some states, the underwriters have direct agency, which means they're also the title company and the title underwriter. In Maryland, at least to my knowledge, they're title underwriter, and then we're title agency. So when we conduct the closing, we're acting as their agent.
Yeah.
The documents that we release is as their agent.
And negligence is on you, obviously.
Yeah, negligence is on us. Yep.
Yeah. I mean, we've been involved on the lender's side with a lot of title insurance claims from people selling properties and not paying us off, right? Because they convinced the title company, it's like, oh yeah, hard money bankers already been paid off. That's happened, like, you laugh. That's happened like 5 different times, 6 different times. It's happened more than it hasn't. That's happened before. There's times like we're in 2 title insurance claims right now where we did a loan on a property, and before, in essence, our buyer put a lien against himself, and he recorded it a few days before he bought the property. So that's an interesting one. Yeah. Right? Because like we did a loan of 400. He put a loan of 400 from one of his entities to his buying entity 4 days before that physical closing actually happened.
Yeah.
So I'm not sure what he was trying to accomplish there. But again, title insurance doesn't mean like who's on. Like a lot of the times it's cool, we'll cover it, and then insurance companies don't lose money. Like they don't like losing money. They're just going to go after whoever they can. You know, we've been involved in fraud cases where title insurance claims get paid out, and then they go after the parties, or they'll go sue other title insurance, things like that.
Yeah.
So, but it is good to know who the actual parties are.
Yeah.
Because a lot of people I don't think know that.
Yeah, no, I can explain it to you. So Universal Title is a settlement and escrow company and a title agent. So what happens is that we handle the funds on the escrow side between the buyer and the seller. Obviously, the money has to come through the escrow account and then distributed. We facilitate the transaction with the lender on the documentation side. But at the end of the day, the insurance policy is written on First American's paper, which means we are acting as their issuing agent only and not the ones actually handling the title insurance paperwork.
So you act as a fiduciary.
Correct.
You act as basically a documenter, and then you're an insurance agent on top of all this.
Correct. I myself am a licensed attorney, a licensed title producer, and a notary.
Got it.
Did you know if you're a notary that when you get paid for notary, it's not taxable or something? I don't know how true.
Oh, I didn't know that.
That's what some notary told me this. He's like, yeah, all my notary work's tax free. I was like, interesting. I don't know how true it is, if that's what he's hanging his hat on, but good for him.
I didn't know that.
Man, I had a question that I wanted to jump in on. Related to so let me ask you this question, because see, a lot of I feel like I'm a little bit more educated on stuff just because,
well, it's your position in the deal.
Yeah, but also I've done a lot of transactions, right? Like a real estate investor who's flipped 20 houses. I don't care what title company I go to. They're not looking at their owner's title policy. They don't even know what to look at, right?
I got
like,
comments.
Like you bought enough that that's something you look at. I have an attorney that represents me on all my loan docs, right? So like,
shout out to him. Thank you.
When you
great
do,
guy.
when you do when you produce title, right? Owner or lender's title.
Yeah.
Let's say it's First American. Is it straight kind of like behind the scenes? Is the goal to protect you guys or First America, and obviously the insurance company, you know where I'm getting at, as clean as possible? And then in essence, it's the buyer or borrower or whoever or lender to try to figure out a way how much they can push to try to get the policy more on their side.
So,
because that's new to a lot of people. A lot of people are like, hey, this is just an insurance policy. It's not negotiable.
No. The first objective is to get it right.
Yeah.
Like if one, you either don't see any matters of concern on the title, which obviously naturally is a good scenario. But assuming we're talking about ones where we see issues or we have to analyze
survey example. Like we don't know because we don't have a survey. So we don't know if there's a survey issue. That's always a popular one.
My first objective is to get it right.
Yeah.
So make sure if there is a title problem, we get it cleared first and foremost. There are occasions where you just can't get it cleared. I'll give you a perfect example. Let's just say someone within a chain of title 25 years ago borrowed money. We know they paid it off.
Yeah, but you can't.
The lender just didn't release the lien.
Yep.
Right.
Great example.
I mean, I don't have their social.
Good
I
example.
don't even know if they're alive, and they got a name that's very common.
Yep.
In that case, you will undoubtedly jeopardize the transaction for the buyer and the seller, unless you go the route, which is what you were talking about, basically, which is indemnity or finding a way to insure over that open mortgage in a way. So that's where analysis comes in, is like, okay, what are we doing? But even in that scenario, everybody knows their affidavit signed. Everybody knows what's going on. So people are making an informed decision about how to move forward and proceed.
But the risk's on you though at that particular case, right? Or
there's two things when it comes to that scenario.
Well, real quick. So my point is, and again, like I'm not trying to call anybody out or anything like that. That's not the purpose of this.
Sure.
The point is like on your end, it's like you would just put it in. Normally, you just want to put it in place that says, "Hey, there's a $25,000 loan on here. I can't guarantee first position." And obviously the deal wouldn't go through if they're getting bank financing, no doubt, because the bank's going to want it to be first mortgage. But that would, the original policy, I would think, like that would be how it would spit out.
Yeah. So what happens that in that case, once we know we definitely cannot get this released, what we do is we request a copy to seller's owner's title policy. Yeah. We want to make sure that it was done the same way, which means that they don't have an exception to their policy, so they're covered. So in that case, we take that policy and we request what's called a letter of indemnity. Now, these days, most of the underwriters, because of the number of requests that they get for these, they have a mutual agreement saying, okay, if we have one of these, we'll indemnify you. If we have one of these, we'll indemnify you, vice versa, just to kind of save paperwork and man time. But there are two things with that. There's a financial risk, and then there's what's called the marketability. You're right about the financial risk. If we decide that we're going to move forward with this promise from the seller's underwriter that they will indemnify, the financial risk is obviously less now, because we know if this even becomes to be a problem, that there's a backup.
You can go after them.
Both on the underwriter. It just goes down the chain. Yeah, it just keeps going back the chain. The second one, this is where we inform everyone and we get an affidavit signed. This is called a marketability issue, because what could happen is, let's just say the person wants to go sell this property within a couple of years, and then for some reason the next transaction they don't want to proceed because of this. They want the release. They're forcing the release to come out. That's something we can't provide. That's where the lack of marketability comes in. So that's the second part of this. So for me, it's, can we get it right? If we can't, like if we can't get the release, we have to only proceed through an indemnity, an insure over, and then they have to decide if they're willing to take the risk on the marketability.
Who decides that?
Really the parties. I mean, the lender and then the buyer at the end of it. But the lender, just remember, lender, because they're giving out a purchase money mortgage, they're going to get first lien. There's only very few items that are going to trump that lien. Yeah.
But really on the buyer's end, they just have to go through the same process for the next person.
Exactly.
That's all it is, right?
Exactly.
Yeah. All right. So first off, let me address.
This is good. We're doing all this.
No, well, first off,
this isn't to call out like title insurance or anything. Like,
this is an education
that people don't know. I mean,
educational.
I mean, I talk to our attorneys literally every week because every day there's issues on title policies,
right?
And most of them aren't big issues, but we take business risks, and it's just good to inform people because a lot of people don't know,
right?
Yeah, they don't even get it.
Well, I was gonna say props to you, man, because you're the first one that has like actually made title like understandable and actually somewhat like tangible and being able to like digest it, right? Because it is hard, and this goes back to Jason's statement of like, oh yeah, you've bought and sold a lot of properties, you probably you know what title company you want to go to. Honestly, for me, it's relationship, and I want to know who I'm talking to. Like if I call you up and say, hey, just get this deal done, I trust that you're acting on our best behalf.
Yes, of course.
But then there's times when things come up, they're like, well, we need this exception, we need that. I'm like, I don't know what the fuck you guys are talking about. Do your thing. Like I don't really know what an exception means, because I'll give you an example. We closed a property in West Virginia, in Ranson, right behind Harper's Ferry. So it's not real West Virginia, but it's West Virginia. And our lender wanted, and this, if you can clarify here, they wanted an exception for the mineral rights, I believe. And
it's not a Maryland problem.
Yeah, but no, okay. But the point of the story is the title company wouldn't issue it because they didn't have the right relationship with the insurer. Oh no, we can't give you this exception. There's mineral rights in West Virginia. I'm like, we're not in coal cracking country. Like, just let it go, whatever. But can you explain to the audience what this means when a lender requests an exception? Because I don't think people understand what's happening there. Because I know Jason talks about it all the time. He's like, yeah, I'm going to get this exception, that exception, and do this. Like, what does that mean?
Yeah, I think what the lender probably wants is for it not to be an exception. Yeah. So an exception, if you're a title policy holder, which would be the lender or the buyer, an exception to your policy means something that's not covered. So if a lender says, hey, I want this removed, that means there's an exception on there and they don't want it on there. Survey is a perfect example. Lenders don't want to be held to that responsibility that a buyer would on a survey or a meets and bounds. So they'll say, confirming that this will not be an exception on our policy.
And is it fair to say that typically you will put an exception in there as like the boilerplate at the beginning? most title companies, not just you, but most title companies, because
it's on the commitment.
Yeah.
But we identified this to be removed.
Yeah.
So whether it's an affirmative email to be sent out or a request that comes through, we will let you know that it's going to be removed.
And I mean, is that real risk on your guys' end to do that? I mean, it's small risk, but like there's still risks there, right?
It's an educated risk. I mean, we know exactly. I mean, that's some of this stuff is throughout the experience and title.
And that's what. And again, that's on the lender's policy, maybe not just the owner's.
Owner's policy
They're always going to have it.
Owner's policy will have an exception for
order a
meets and
survey.
bounds, because we don't go out to the property to do surveys on the property. It has to be a boundary survey, the expensive one, to come out and tell you where the corners are.
And sometimes, like when you're working in Baltimore City and you have all row homes, it's very easily definable, and you don't always need to go have a survey, right? Like
I'll give you the story if you want to.
Let's go.
So most people just experience. Most people don't do a survey as a buyer, and when it comes to Baltimore City properties,
and especially in residential.
You're almost like, well, I know where the house is, I know where the stoop is, I know where the concrete is for the city. We had a client, this is probably 8 years ago. They did and because this would contradict what I just said a couple of seconds ago. We had a client who ordered a survey, a location drawing. So basically just, on paper, what the house looks like. Survey came back that the property line is off by 10 feet. And we sent it out as a notice to the parties. And on the seller side, they objected. They said, there is no way this property's off. To simplify, we look at the deed and it says, let's just say the lot is 100 feet deep. And we were getting such pushback that they were just not budging. And the buyer was just trying to figure out what's going on. I asked my surveyor to meet me at the property. And those guys, I mean, have you ever seen their measuring tape? I mean, it's like, wow. So I stood right by him, and I had the paper on me to tell me exactly how much in footage it was. So he stands there. This was right across Patterson Park, and he takes the meter and he goes back, and sure enough, it was 10 feet short. And luckily, the buyer was still okay with it, but the point was
which he shouldn't have been.
But yeah, but they were okay with it. I mean, it was a property they really wanted.
Then you can't. What do you do with it down the road?
Well, it's an exception. I mean, it's not covered. I mean, that's
most
not.
People aren't going to go through this. I would say, why'd the guy even know to have this full blown survey done? Like, why?
He just wanted to know where his property started and where it ended, because you may know sometimes you got that concrete wall in the back that shares between your lot and the neighboring lot, and so it was 10 feet off, and they were okay with it. They took the risk.
I mean, that's ballsy. Like,
yeah.
I mean, I bought a property and this is commercial property in Mississippi, and the guy built the property outside his setback requirements. And I knew it going into it. And I was like, all right. So we had the survey, we had a conversation with zoning, all these other things. He's like, why? Like, zoning's like, why are you worried about it? I said, because in Maryland, they make me rip the building down.
Yeah.
They're like, no, not a big deal. The building's outside your thing. You know what? We're just going to quit claim piece of the street to you. They literally deeded us a piece of it. I'm like, why don't you just give us a variance to the setback? But like, I know it's more popular in the commercial world of like, you need to do surveys and understand what you're buying, because you could build a building outside of your lot lines, setbacks and everything else. You can be in big trouble.
Yeah, city's a little funky. Sometimes you got those alleyways in the back, and sometimes you got that lot extending a little bit in and out. But what I contradicted was I told you that we don't go out to properties. That was the only time.
Because you were early in your career. That's why you did that.
I was really trying to capture some business but I honestly, that just goes back to the point. I want to do it right, and if I can find a way to get it right, I will.
Yeah, exactly.
Yeah.
When I don't know, we'll tell folks all the time, other private lenders that might ask us for help on deals and things like that. But it's just like, listen, the title insurance company is going to protect themselves, right? They're going to give you the policy, right? But like, you can't, like, what drives me nuts is private lenders that will like do their own loan docs and they'll do their own title review.
Yeah.
I think I've looked at 3,000 titles. I still have questions on a lot of those policies. Like, you got to have an expert kind of.
First time you look at one of those performance, you're like, what am I staring
like
at?
to really help. Like, we're not going to, do this. Like, on our end, our attorneys are negotiating with the title companies. Now, a lot of the times, there's nothing to negotiate, right? It's like, sorry, we can't. But like, and this isn't like, whatever, who's the biggest and trying to, negotiate. This is like, these are real risks that we try to eliminate.
So here we got a good example here. I'm a buyer, right? We do real estate. Jason's a lender. Now there's a buyer's title insurance policy and there's a lender's title insurance policy. Yes. Do I have, as a buyer, I guess, what am I protected on? As a lender, what is he protected on? And do we share any of this insurance anywhere between us on a property?
I love that you bring this question up, because I can't tell you how many times it comes up. And it's a natural question. You're as a party to the transaction, you may want to think that, well, if the lender has it, then whatever happens, they can maybe fix it on my behalf if you're a client. So an insurance policy protects the insured. I mean, that's a very simple concept, right? And just that we discussed, there's certain things that the lender has protection for because it's not an exception, but the buyer will have an exception for, which means they're not protected. Which means that if it does become an issue, it will cause the buyer headaches. And if they don't have title insurance, for the lender, no, they're protected. I mean, they're a purchase money mortgage, the most superior lien you can have against the property, subject to some exceptions, of course. And then the important part is what people fail to notice is the equity portion. Let's just say you buy a house for $500,000. You put $100,000 down. The lender financed $400,000. If you don't buy title insurance, that $100,000 is exposed to title claim. A title claim can come through for $450,000, $500,000. Even if the lender is somehow covered and $400,000 paid out, you still got a portion of $50,000 to $100,000 that's in risk out there. So, and in this economy, I mean, we've had for the last 2-3 years, people have put a lot of money down on their protection. And then two, as you pay down the mortgage, you're increasing your equity, which you've left further exposed by not buying title insurance.
Sure. And it's cheap. I mean, let's be honest. It is cheap enough, relatively speaking. There's some days where I'm like, what am I paying for? Like, this is so, like, one owner. There's no issues. Like, why am I doing this? And then I'm like, all right, for a few grand to protect $1 million or whatever. Like, it's what, a couple grand. Well, it's state dependent, but a couple grand per million or whatever. It's like, why am I fighting over this?
The benefit is two reasons, actually. One, obviously, if a legitimate claim comes around that needs to be paid out, it gets paid out if it's, warranted. Two, the defense part, that's the most important part. Let's just say somebody does come and file a, frivolous claim. For you to go hire an attorney just to get that retainer signed, that's going to cost more than the title insurance.
Dude, every title claim we've ever had, I have free counsel.
Yeah.
I mean, I'm dealing with it. I'm doing it right now. I mean, we had a fraud case where we did a loan on a property that a guy stole. In essence, he stole the property.
Stole the title?
He stole the property, and he got a loan, and then he came to us and got another loan. So, like, the original title company that messed up, like, the middle title company was like, okay, cool, like, no problem. Like, they didn't go back to look at the original deed of how he got the property years back. I mean, he might have, but he might have overlooked that part of it because, he was refinancing with different lenders, different title companies, different title insurers, and things like that. Yeah. So I can understand how that kind of gets missed. He stole notaries and stuff like that. But anyways,
it's a fraud.
Big fraud case. But like eventually there's a property sold to a homeowner or there's something involved. Like, imagine being a homeowner and not knowing that the guy before you stole the house. Right?
Well, yeah, I mean, your story.
Let's say it's an out-of-state. Let's say you have an out-of-state property and it's been vacant for years. An investor goes in, deeds the property themselves illegally,
right,
through fraud. They figure out a way to manipulate that to get that through, and then they sell the property to another investor or not. Like, this stuff happens. This happens in a lot of cities too. And especially in good real estate environments like we've had over the last 10 years.
And the city doesn't record for 9 goddamn
months. A lot of these counties don't record forever. So by the
Mm.
time they're out, the next thing you know, there's a happy homeowner that starts suing everybody, and you got to protect yourself. Some of the as a lender, the title claims that we've had for title insurance were ones that, like, these investors want to go flip properties. They flip it to a new homeowner, right? And then it didn't show up because they flipped it over quickly, or they're like, oh yeah, that lender's already been paid off, or like they forgot it. The title company literally forgot it, and it was like, instead of paying $100,000 to HMB, they just their proceeds were $100,000 more, and they're like, okay, like,
yeah, HMB's fault. Sorry.
yeah,
bud.
like, exactly. That's what the way they look at it.
Yeah.
Well, as soon as we find out about it, we file a title claim, and guess what? All of a sudden, that happy homeowner's title insurance starts getting pinged, and they're like, "Holy crap! I just bought this house. It's my first house ever, and I'm getting foreclosed on." Right? Like, and then everyone steps in, sues everybody, and the point is like it costs a lot of money to do some of that stuff, and I don't want to hire my $550 an hour attorneys to do that. Like,
right. That's the point.
Yeah, they hire, they're using First American's title insurance.
A one-time fee at closing. Like, that's it. You pay one time.
One time. That's right. And you amortize it. I mean, even if you say somebody lives in the house 5-7 years, even if you amortize it based on that, you're looking at, a few dollars a month. So,
I mean, Ian and I have been in this, like, not to, like, we've been trying to figure out a way to, we have a lot of insurance that we pay for.
Yeah.
Let's put it that way. Between title insurance,
it's cost of doing business.
Forced place insurance, E&O insurance, like, and as you know, because I'm guessing title insurance has gone up over the last few years.
Yes.
Because, with more claims and things like this, all insurance has across the board. But
what was the property value? The property values have gone up. People are putting more down. So the risk is
there's more fraud when there's issues in the economy and stuff like that. There's more scrupulous people. There's, like, people are smarter. Like, things are on public record now that people have access to that they didn't have access to before.
Mm-hmm. Right.
So that's just the nature of it. And it's unfortunate. I heard a good podcast about, the insurance industry, and that's what it is. Like, everything's up and everything gets ruined for everybody else.
Yeah. I mean, there's always going to be some bad behavior out there. Not to encourage it, but I have some concerns with respect to the recording in some of the jurisdictions.
Yeah,
I mean, there's
Baltimore was so bad during COVID.
It's tough. There's too much exposure, there's too much lag time in some recordings.
Well, and then the fact that you can e-record nowadays, and some jurisdictions haven't adopted that, and you're like, what are you doing? Like, because I presume that e-recording reduces everybody's risk overall.
Yes,
if they would just get it done.
Because you do it simultaneously as quick as possible.
Yeah,
but it was also it was like you got to feel for the agencies. I mean, the volume was just so much. I mean, it was just the number of transactions coming through. I mean, refinances, purchases, they're all coming through, and it's just, I mean, they got buried. So I feel for them.
And there's human error.
Yeah, I mean, it just happens.
Like, yeah. So real quick, and then I think we should end on some like funny stories or some the craziest.
They weren't funny at the time, but
some of the craziest things that you've seen.
Sure.
We'll end in that. I think we'll keep the viewers on edge. But so, like, how long does it? Give me an example. Like, how long does the Baltimore City lien sheet take right now? And is there any way to do it quicker?
No way to do it quicker. Right now, our experience is anywhere between 4 to 6, 7 weeks.
Weeks?
Mm-hmm.
Mm-hmm. It used to be like 10. You used to be able to just pay and they get it back in 72 hours.
So what does a title company, what does a buyer do if they need to close quicker? Like, does a title company take exceptions to stuff? Let's say it's a refinance and they already own the property.
Refinance, you don't need a lien sheet unless you're changing title.
Oh.
Yeah, you're good.
Oh, so why?
It's because it's with respect to transfer of the property. So Baltimore City will require a lien sheet if you're either removing somebody from the deed, or as part of like a quick claim deed, or you're just transferring the property.
I mean, we've had some banks that would just, I said, okay, we'll get the title company to do a refi. They're like, no, we'll just handle it all in house. We'll record it ourselves, do our own
out
thing.
of state banks.
No. Well, technically they're out of state, but yes.
Yeah, refi, you shouldn't need a.
Okay, this is a purchase.
Yeah, I'm talking about refi. No, purchase. No, I would always use a title company because I don't know what the other side's doing. But sometimes on refis, they go way quicker.
Okay.
Yeah.
What about other, like, how long's title take? Like, let's.
So to answer your question, so when a contract comes through for Baltimore City, that same day we're ordering lien sheet, no exception. I don't care if it's 20, 40, 50 days, whatever it is, because at least I got one in hand when it comes in. But we're also notifying the parties, like if they have a 2-week closing timeline, we're just going to let you know, like, listen, this is all dependent on the lien sheet.
And most contracts should have a stipulation to say, if we were waiting on title, this thing automatically extends.
It's a 14-day automatic extension on the seller side if there's a title problem.
Yeah.
But lien sheet query, whether that constitutes a title problem or not, it's just
something
we can't insure.
It is if you can't get title insurance.
Yeah, but
we can't insure it.
It's basically a cost of doing business. Like, you can only do, like, it doesn't matter. They stop this contract with you and go with someone else. They're going to wait for the same however many days, right?
Yeah, I mean, there are title companies out there, I think, that will probably do an escrow. I wouldn't do it. I mean, Universal doesn't do it. We're very by the book. I mean, listen, we have a lot of experience on the line. We have a lot of
you know the
license on
risk.
the line.
I mean,
Yeah, we're not going to.
And here's the thing: I can attest to it. Like, if you're a title company, and especially a smaller title company, you have one claim, you're out of freaking business, or
Well,
you're pretty much going out of business. Because when we've had title claims with smaller title companies, this is typically what's happened. They said, "Hey, listen, if I hit up my First American, whoever who I produce title for,
Mhm.
and they find out about this, like they're going to pull me, like they're going to pay the claim, but then I'm going to be dropped. I don't have anyone else, so we have to pay the claim." That's happened. There's been a joint between there. I've had like joint where it's like they pay half, First American pays half. I've had a lot of these smaller title companies buy my note because like they screwed up on something. And it's like, let me buy the note. And I'll pay you. I'll buy your note from you at face value, and then let me try to figure out a way to collect on it because I can't. Like they can't make those mistakes. And typically, fast and loose companies, and they're all going to be exposed very soon in today's market because they're going to try to cut corners to try to save deals because there's less volume out there, and that sucks. And I feel for a lot of folks in that situation, but they might not have had good core fundamentals at the beginning. So,
yeah, we're very process based.
Yeah.
I mean, this is at the core of this business. It's risk assessment.
Yeah.
And we are always going to line in
No
favor
doubt.
of having documentation that makes sure this is good to go.
And there's risk assessment there, but then there's also risk assessment to say I'm doing a tax foreclosure, I'm doing a hairy deal. All right, like you might not be the best fit for it sometimes. Sometimes you need someone that's willing to take a little more risk aversion. Yeah. I mean, I've been there, but then I've also gotten away from that title company now because I'm like, I don't need that risk aversion. When we were buying tax sale stuff and we were getting it from the guy that was foreclosing, I needed someone who was a little bit faster and looser and was willing to take some risk. And there were sometimes he's like, oh, dude, jam myself on this one. I said, yeah, that's between you and whatever you got going on over there.
There are certain things we won't touch. Right out of tax sale, come in for foreclosure when we won't touch it.
Yeah.
We need some of what they call a seasoning.
Yeah.
A few years, a few transactions pass by.
No doubt.
Yeah.
And the fast and loose guys might do it. It might serve them fine until it gets bid. And
it's just a business model. I mean, some people have that business model. We have a really nice core of clientele. We have a really nice business that's based on doing the right thing all the time. And that's a risky business.
Yeah. And also, you don't need to do, a lot of people don't need to do the down and dirty stuff, right? Because they're dealing with the down and dirty clients on stuff.
It just depends.
Hey, listen, title insurance is a percentage of, whatever the purchase price or the loan amount. So do the math. Hey, I'd rather, you want to deal in the dirt and you get down and dirty, crappy deals, or you work all the way up here on the higher end, better quality bars that are going to do more business.
I mean, listen, I've done transactions that were obviously a lot lower in sales price. I treat them all the same. For me, it's like, what does the title come back with? Like, is this something that we can fix, or if it's already good to go? Yeah.
I was going to say, I just got two quick questions.
Sure.
If you have a contract and it stipulates that you need to send a deposit and you as a title company don't get a deposit, is that contract valid? Because part of your job is contract negotiation.
So actually, there's a difference in guidelines with respect to the deposit and who holds it. I can't advise as to whether the contract is valid or not because I'm not a contract attorney. But I can tell you, from my understanding, with a real estate brokerage, there's a certain timeline they have to turn it in. I think it's like 7 days, if I'm not mistaken. Yep. It's not the same with us because we're not subject to the same code and guidelines. So
got it.
I hope that answers the question.
Fair enough. And then, two, if you could just briefly.
And our release process is different too. Sorry about that.
Yeah, no, I've been in a situation where a buyer didn't perform. We ended up in court to go sue for our deposit, and it was not hey, you didn't perform, give me the $30,000 deposit.
It doesn't work like that.
It was, oh, by the way, this is going to the court. It's during COVID, so we'll see you in about 18 months. And we got there, and then the week before we went to court, and then they claimed whatever, and then we were supposed to have a second hearing, and in that time frame, that's when they negotiated a lower amount to release the deposit. So whatever. That's why I was just wondering. And then the other thing is, if you just want to briefly touch, because I know you've been here for quite a while and we appreciate it.
Of course.
Is what, on your opinion, is there a big difference between residential and commercial transactions besides the dollar amount?
100%.
Okay.
Commercial, you guys know this better than I do. You got to be able to wait it out. I mean, sometimes commercial goes idle on you. commercial is what I like about commercial is there's more legal counsel on each party. Like the parties typically are versed in what's going on. At least that's what you hope as a title agent. So when we get to the table,
More education.
more education, right? They know exactly what they're getting. Obviously, it gets complicated. Like if you got a restaurant, personal assets getting transferred, all that stuff, a little bit more complicated. But I do like the fact that they're each party's one more versed, and then two independently represented. Typically,
and the buyer's assuming a lot more risk potentially. Like
Correct.
there's consumer laws in residential that are like, these things go wrong, you're protected.
it's not as regulated.
Yeah,
That's correct. Commercial is less regulated.
Yeah, and hence why you need a survey and a phase one and all these other fun things.
That's
that I'm
right.
like, why am I paying for these reports? But you pay for them to protect your ass.
That's correct.
You have to.
That's correct.
Yeah, man.
All right, so tell us, an interesting story. Maybe we won't use the word fun, or I don't even know if these have happy endings to them.
I think they do.
Go ahead.
Well, I hope
Go
they do
ahead.
by now for them. All right, so you guys do refinances on the commercial side. On the residential, I know you guys know there's a 3-day right of rescission. So we did a transaction for at the time there were 2 folks on title. Now they and you may know this from doing loans. They were both borrowers on an existing loan. They were both on title. It was a husband and wife. They were going through the divorce process. As part of the divorce agreement, the spouse, the husband was supposed to come off title, but the mortgage was also supposed to be paid off, and he was supposed to get an equity portion from the property.
So cash back.
Cash back. That's
Yeah.
right. So so prior to the closing, we obviously had to be in contact with the gentleman because he had to sign the deed over for us. And then obviously the cash consideration on there. Like we need to know how to pay him and stuff like that. So he reaches out to me, and during the conversation and during the transaction, I realized he was also Persian. So we're speaking, and he wasn't educated on the 3-day right of rescission. His thought process was to just show up to the refi signing, sign the deed over, collect the check, and walk out and be completely done with this.
Money.
Cash money. That's right. Well, we don't handle cash, but yes, it's a check or wire. Anyway, so as we're talking, and I'm just like how I am. I want you to be always comfortable when you're coming to sign, and that's how all of our offices are. I want you to know exactly what you're getting into, what you're signing, what the documents say, everything like that. So, he kept telling me that. He's like, I want to sign the deed when the check is ready. I said, I think there's a point that you're not aware of. Let me tell you what it is. I said, this is a residential primary owner refinance. I said, a primarily occupied property refinance. This is a 3-day right of rescission on this. Yep. So when we sign the documents, that's not when the money's funded. It's actually 3 business days and after, assuming your ex does not cancel the refinance loan. He's like, well, nobody told me that. I said, I understand that, but part of my job is to be a facilitator, but also guide the transaction legally. And he said, okay, well, what do we do about this? He said, well, and I told him, I said, one, you have to trust me, and you can look me up, you can look at my licenses and everything, and you have to trust me. But assuming that's hard for you to do, especially our background, we spoke Farsi together. I said, how about this? Can I tell you what happens within our process to make you more comfortable? And he said yes. So I explained everything to him. I told him that, listen, we're an escrow company. We're going to hold all the documents and the funds in escrow. And not to mention, there's a line item paid out to you for your share of the equity. And I said, oh, yeah, now I feel great. I feel very comfortable. This is all great. Comes the day of the refinance, and I thought I had this thing laid up. Everything's going to be perfect and smooth. He shows up, and the problem now is he doesn't trust his former spouse. And they got into it, and it blew up in my face. I mean, it blew up in my face.
That's got to be a common one.
Yeah,
that's got to be common.
But for typically we know of issues before it happens. We have little surprises. We run a really nice operation. And for me to know that I had taken care of this, and not to mention we spoke Farsi taking care of this,
Yeah.
and then for this to come back, we did get a resolve. That's the one thing about me. If I sit at the table, I am very adamant that I'm a closer. Like if the parties want to close, I'm going to close it for you.
Yeah.
But obviously it depends on the parties.
Well, that's got to be a common one. I mean, we were involved in a transaction where the lender, and it was like the buyer and seller weren't getting along. The seller had to sell via court order. Actually, there was like, you either sell or it gets sold for you.
Right.
And he just didn't trust the buyer. And it was just, and then it got to the point that it's like, I want my check. Like, here's the deed. Give me the check.
Yeah.
Chicken and egg stuff. Like, here's my check. As soon as I sign that, I'm gonna grab this check
and I'm running
as quick as possible. And they're like, this isn't how it works. Like, this is a remote transaction. Like, I'm coming to your house.
Right.
And they're like, well, I need the check right now. I want to make sure it clears before I sign this deed. And it's like, dude, I'm not trying to like pull anything on you.
Right.
Like, just chill out.
That's a common occurrence.
Exactly.
You have to. It's
like, I want the money right now.
Yeah, I think
Before
the perception is like, folks are like, if I don't get this check at this exact moment, then it's not going to happen. But there's a lot of licenses and financial licenses and legal licenses, like people and Universal Title and other reputable title companies.
The good news, I think, for most like real estate investors, commercial property owners, a little bit more sophisticated. They've done more transactions.
Right.
They understand it.
Yeah.
It's like, we're good.
Yeah,
we're good.
We're good.
Anything else you want to add, Ian? Any other questions you want?
I feel like he's getting off the hook.
Yeah.
No, he's getting off the hook.
I'm not done yet.
Oh, all right.
Well, go ahead.
So what's the?
No.
Go ahead.
Okay. What were you gonna say?
I feel like I'm being set up.
Yeah, we'll
I'm sweating out a little bit.
No, I did. I
zoom
did.
in on him on
Yeah.
this.
I will say before we put you back on the hook is I did have a transaction one time early on when we were wholesaling a house. Guy showed up with dollar bills and literally, I mean, to the penny change.
Yeah.
And I was like, dude, what the fuck, man? And our title guy was like, get out of my office. He was like, get out of my
please,
office.
dude. We do not take. We don't
Yeah.
take.
I can't take cash.
We don't take.
They don't even.
Oh.
Nobody takes. McDonald's doesn't take cash anymore, sir.
Yeah,
We
no,
don't
we won't make you sweat anymore. We like to ask all our guests. I don't know if you're a reader or a podcaster. Like, what's one book or podcast that you like to listen to, or that's like influential to you that everybody should know about?
I recently read the Disney guys, the Bob Iger, if I'm not mistaken, his name, the Disney CEO.
Okay.
I read his book. It was
Really?
great. It was fantastic.
good to
The
know.
trials and tribulations of it it resonated with me a little bit because I'm planning on Universal Title too. We're planning on continuing to grow and getting to more territories and offices. So and he just constantly had challenges, like where he came from, moving from broadcasting, I think he was in, and then he went to Disney, and how he just continued to have to evolve personally. And that's just been my life, honestly, for the last 3 years. We didn't expect anything with COVID. Once it hit, it was crazy. I mean, I was literally signing documents. Clients were sitting here. I'm like over there. I had to scan up what they were looking at from my phone with a mask on. So we just continued to evolve like throughout this whole title process and the changes and everything. So it was a great book. Podcast wise, honestly, I want to get more into it. So hopefully you guys will have me back and give me some more tips.
Yeah, I mean, you took the bit. I think this is our second in studio where it's been like, hey, this is my first podcast I've ever done. So I give you credit. It was it's fun, man. I mean, dude, most guys,
I love it.
Title in the process is like it's a necessary evil, but it's not always a fun thing. But I think you made it. I think you made it fun. I mean,
I think you made it fun. Listen, people want to know, hey man, how do I make money? How do I get money? How do I raise money? How do I do this? And like that's all good, fine and dandy, but like
until you're the day before closing, they're like, "Oh, you need this and you need that." And
Yeah.
I'm like, "Who are you? Like, get away! Get away from me! Like, I need to get this done." And you're like, "No, I need to check all my boxes because." Lawyers are involved. You guys are always checking your damn box. A lawyer and insurance agent all in one. It couldn't be any worse.
I appreciate the compliment and the high praises. If you have me back next time, we can definitely do one on wholesale and assignments. I'm sure you got folks that watch it and love wholesale.
That's a good topic. That's a good topic.
Very good topic.
And we can do a virtual one as well.
Whatever you need.
What's the best way to get? I mean, we've talked about a lot. Obviously, Universal Title. You guys got, I think you said 22 offices.
Yeah.
What's the best way for someone to get a hold of you if they want to utilize your services?
Yeah, 100%. So universaltitle.com. Look us up. We have offices throughout the DMV, Washington State, South Florida. Try any one of our offices if you don't have any affiliations with them right now. But we are a fantastic, growing title company, and we are always looking to work with new folks that are either into the business or getting into the business. But we will take care of your file, top-notch service, and always do it right.
Sounds like a plan. So universaltitle.com. We appreciate you coming in studio and look forward to the next one.
All right. Pleasure. Thank you, guys.
Thanks.
Thanks for tuning in to the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.